All right. Let me see if you can see me. Hello, hello, hello. How's everyone doing? Hello, hello, hello. Good morning, good evening, good afternoon. Hello, everyone. Hello, hello. Can everyone hear me? Can everyone see me? Is everything okay? Everything okay? How's everyone doing? How is everyone doing? Let me know, let me know. Good evening, Usman. Derek, love to see it. Wahid, Antoine. Hello, 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 Alex. Hello, Jones. Stem. Bashad Frost. Satnam. Pets lovers. Okay. Hello, honey. Okay. Calm down. Hello, Usman, Jennifer, Deepak, Alan, Tommy. How's everyone doing? How is everyone doing? From Colombia. Love to see it. Love to see it, Ivar. I can only understand so much, but I understood half of it, I think. I had zero hope that I'll see you live today. Why? Why, my friend? Why? We can see in here today it looks more brighter. That could be because of the light. If it's too bright, you have to let me know. Let me check if it's not too bright. Let me change one. How's that? I think it's alright, no? I think it's alright. I think it's alright. Hello, 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 hello. How's everyone doing? On a lovely Sunday. I think for a lot of people already Monday, potentially. A lot of people from India as well. Love to see it. Where it might already be Monday, I'm not too certain. Where's the video you were to upload yesterday? I'm sorry, Emek. I'm sorry. I'm sorry. It wasn't ready yet. It wasn't ready yet. It's in the last stage. I can promise you that. It is in the last stage. It is in the last stage, but it's almost ready. It's almost ready. I won't put another date on it. But it will be there very soon. Very soon. Mr. FVG. Mr. Josh FX. A very familiar name for me. Hello, Reiki, the unusual context king. Love to see it. Hello from New York. Would love to visit New York one day. I'll try my best, Ivor. I'll try my best. I'm not too sure how it actually works, but I'll try my best, my friend. Must a sharp turn cause displacement? Well, the thing is, and the way I personally objectify it, is a displacement is a fair value gap. So fair value gap equals displacement. Displacement is a fair value gap. So a sharp turn has a fair value gap, meaning, yes, it has a displacement. If that makes sense. Trader Law, love to see it. J Cuervo, a lot of familiar names, love to see it. All right. So actually, I have a few things that I want to go over, but I have one thing mainly, and I have another question for you, all of you there. You can see, let me see if you can see this right there. So number one, we have the forecast. Of course, we have a forecast. Next, the topic for today, I have a question mark because I was just curious what you are all struggling with. So please, if you want to, and if you want me to go over a specific thing, then feel free to let me know right now in the chat as well, and we'll go over it. I'll pick out a few of the best ones and we can go over it as well. And of course, we'll go over questions. So in the meantime, we can also go over questions, but feel free to let me know what you want me to go over. And then I'll write it down as well. Candle signs. Candle signs. I'll write down candle signs because one of the next videos is actually also candle signs. We have World of Fair Value Gaps coming up. I hope next week. But next to that, we have candle signs as well coming up. Very interesting. So let me wipe this away. Let me see. We have 2 candle rejection, not yet. We have candle signs. I'll just write down CS right there. Then what do we have? Hair care routine. No. I don't do a lot, to be honest. Let me see. Market maker model. We can go over market maker model if you want to. We can go over the foundational levels because I also saw some bias. So bias when scalping. Okay. We can go over bias. Bias. Okay. What else? ST. If we combine it with market maker model, we could do it. Daily bias. We can. These are pretty much combined as well, to be honest. Candle signs and bias. We can combine those two. Let's see. How much confirmation do we need? It's a good one, actually. I like that one. Drawn liquidity. Okay. So let me go over foundational levels. I'll write down. Let's just do FL right there. FL. It all ties in together as well. In the meantime, if you have any questions, of course, we can go over it as well. But these are quite good. I like these right here. I like these. Now, they all tie in together, I would argue, because candle signs also helps you with bias. And then you have foundational levels right there. That is also part of bias, etc., etc. So let's go over those. Then in the meantime, if you have any questions, of course, feel free to let me know as well. All right. First, of course, we have forecast. Let's go over forecast first. Let's see what we have. And before we go over price action, let me actually, there it is. Let me show you the economic calendar as well. Right there. Perfect. Let's see. All right. Last week was what we mentioned in the forecast was not necessarily the best week. And regarding the economic calendar, it was quite a difficult week because the economic calendar as well. Because we had the election right there, the elections, presidential elections. Then on Thursday, we had FOMC statement. So it's a week filled with disturbances, as I like to call it. Now, right here, if we go into the new week, which is next week right here, then we see on Monday, bank holiday, US dollar bank holiday. So most of the price action or most of my action is going to be from Thursday on, but Tuesday right there, we see also we have CPI on Wednesday. Something we have to take into account. Then Thursday is quite interesting because Thursday and Friday, in my opinion, price action clears up quite a lot. And the reason for that is because we don't have that disturbance of those big 3 news events anymore. So what we'll see the weeks after that as well, it's quite clear. Then heading into Christmas is where the volatility dies down again. But that is definitely quite interesting. So my action is mainly going to be at the end of the week, meaning after CPI release right there. Now, right here, let's see what we have on TradingView itself. Let's see. All right, on the monthly, let's start there. Nothing too interesting, to be honest. On the weekly, we do have a few interesting things to go over right here because we have this weekly fair value gap that we had a sting into right there. Now, if we want to go higher, then we will run into those opposing PD rays right here. So we will see we have this premium ray that we are running into right there. That's like a bump in the road. We talked about that, I believe, last week as well. It's a bump in the road for if we do still want to go higher. That's where we'll create a rejection. It's those resistance areas right there. Now, if we do want to continue higher right here, we'll see a rejection like we saw right there. Now, last week, the rejection was actually, it's quite a large rejection like we saw right there. So I wanted some more confirmation if we do want to continue higher. And here on the 4 hour, we do get 4 hour value gaps to potentially continue higher from as well. Overall, I'm bullish right here heading into next week on the US dollar. Unless we start to disrespect everything, for example, those daily value gaps right there, and we start to continue lower right here, then I might switch my bias throughout the week as well. But overall, I am bullish right here heading into this new week. Then, taking a look at the indices, what do we have? So the indices finally, and it took a while, but the indices finally followed through on their higher tower objective. And all of the higher tower objectives for the indices were simply said, bullish. So Russell, ES, NASDAQ, simply bullish on the higher time frame still. Nothing changed in that regard. Now the elections finally, well, were the reason that the price finally had that push higher right there. So I want to mark out this premium race because I think we can deliver towards those premium race right there towards the left. For Russell, that's that swing high right there on the left as well. And let's see how we can deliver there. We have a nice daily fair value gap sitting right here, which we can continue higher from potentially. ES, and the tricky part is that ES, NASDAQ, and YM, they are all at all-time highs. And I personally am not a big fan of all-time highs. Why? Because I don't have a clear target anymore towards the left. Now, some people like to work with Fibonacci's, whatever it may be. I don't like to do that. I just like to base my things off of price action alone. So right here, for me, this is price action that I don't like. And I always want something on the higher time frame than to support the idea again. Even if you're a scalper, so even if you're a scalper, it's very important to understand that right here, above an all-time high, it's not necessarily the highest probability price action to also go ahead and go into the 1 minute and go scalp. So here, I would like to wait for the daily, see retracement back into that, to then potentially continue higher again. Or even a week after the weekly value gap that we might be creating as well. But I want to wait for a retracement, because when we create a retracement, we have again that new all-time high that we can look to target right there, and then we can potentially get involved again. Now that looks quite interesting. YM is the exact same thought process right there with the daily value gap as well, and ES also the exact same thought process. That's personally what I would like to wait for. DAX right here, not super interesting. A big consolidation right there. Does not look very interesting to me. Would like to wait. So if we want to see higher prices on the dollar right here, then the majors, well, at least where USD is at the end of the ticker name, we will see lower prices potentially. Now on Australian dollar, US dollar, it was quite an odd week because Australian dollar, US dollar was very strong right there. We saw this is the weekly value gap. We are sticking into it. We swept this low, then went to continued higher again. So we had a big rejection, a big sweep as well. And now we are coming back lower. It's quite odd price action. I don't like it right there. I prefer some other pairs. But if we do want to continue lower right here, this weekly value gap, we are respecting it nicely. And on the daily, on the 4 hour, we could see some fair value gaps right here to also continue lower from. That could be all right. But again, Australian dollar, US dollar is quite strong. So I always prefer to find the weakest pair. And EU, for example, what we'll see is a lot weaker right here. So what we have, you might hear my dogs barking a lot. At least I can hear it very loud. Anyway, what we have right here is this weekly value gap. We are respecting it right there. We can continue lower, reach these targets towards the left, those swing lows right there. Daily value gap. Now this daily value gap to me is not that interesting. And the reason for that is because if we do create this retracement, again, I will still be bearish, but I'm not expecting a retracement back into that, ideally. Why? Because that retracement is quite a large retracement to make to then continue lower. So if you logically see this price action, this drawn liquidity, the next drawn liquidity is closer than this retracement. So again, I oftentimes use a keys analogy, or when you go out of your house and you need to be somewhere and you forget something, then it doesn't make sense if you're almost at your destination to then return and to then go back to your destination. That doesn't make sense. So right here, this retracement is unlogical, is unreasonable at this moment in time before we reach the drawn liquidity. So this drawn liquidity right there is what I want to see price reach for first. And that could be reached through, for example, 4 hour value gaps right there as well. That could be quite interesting. Then GU, let's see what we have. Yeah, GU is strong. It's not weak like EU, and that creates a consolidation. And the reason why this is so important to understand is because if you want to trade the highest probability pair, then GU right here is currently, unless GU and the majors start to become bullish, GU is not the highest probability one for shorts. And the reason for that is because the dollar right there is currently still bullish. It's not showing bearish signs just yet. But GU right there is in the middle, where this is not, it's not weak enough to see good price action right there to continue lower. So right here, I would not want to trade GU. Simply what happens is it creates a consolidation right there. Not interesting for both sides of the market. So not interesting for higher prices and also not interesting for lower prices right there. Very important to understand as well. All right, then New Zealand dollar, US dollar. It's very similar to New Zealand dollar, US dollar. So we have that rejection from the weekly Verwijken. But again, if we take a look at the highest probability major right now, that's currently just EU. If we're talking about shorts, we could potentially see lower prices from this 4-hour Verwijken. But again, I would prefer EU. US dollar, Canadian dollar. Also a sting into the weekly Verwijken right there, which we can potentially continue higher from. Currently, not the greatest price action, and US dollar, Canadian dollar, I would also not necessarily want to trade right here. If you're going to trade one of the majors, then take a look at EU. EU is simply the highest probability right there. US dollar, CHF. Let's see what we have. So we also have the sting into this weekly fair value gap right there. We currently are respecting it as well. Sorry, that's a daily fair value gap. This right there, this is the weekly fair value gap I meant. Right there. Then from that weekly value gap, we have this daily fair value gap, which we can potentially continue higher from. And we also have this 4-hour fair value gap, which we can continue higher from as well. Looks quite interesting. Towards this high right there. That looks quite nice right there. I do like that. Overall bullish throughout the week. US dollar, JPY. Let's see. A sting into this weekly fair value gap, yes, but so what we're seeing right here is that we first reached into this weekly fair value gap. Afterwards, we reached this high. And this high currently, we are sweeping this high potentially to then retrace back into this daily fair value gap. So whenever this is the case, I don't like to trade this because you're trading us against a sweep, essentially. And, well, that's against your bias. That's not something you would want to do. So right here, this is where I simply want to wait for extra confirmation. If we do still want to continue higher, wait for new fair value gaps to continue higher from. But I don't want to trade this at this moment in time. So if we were to look at the majors, I would like to, I would like to trade EU or US dollar CHF right there. Those are the highest probability from the majors. Gold and silver. So gold and silver are in a tricky situation right here. Let's also mark out the monthly fair value gap that we have right there. All right. Then let's go into the weekly. On the weekly, we have this weekly fair value gap and we have this weekly fair value area sitting right there. Now, that could potentially be interesting to look at for longs. But on the daily right here, what we're seeing and what we discussed last week as well, we have a very aggressive push lower back into this weekly fair value gap and into this weekly fair value area. So this daily fair value gap right there, that creates a 50-50 area. Now we actually did have I'm not sure what happened with the chart right here, but we did have a sting into it earlier on. I'm not sure if it's the contract change or anything like that. But right there, this daily fair value gap, I would like to wait for. Not for lower prices, not for higher prices just yet. That's a 50-50 area. That's where it's stuck between bullish and bearish order flow. So here, I want to wait until either we get a rejection, we start to run highs right there to continue higher. Perfect. Or we start to respect it and create new fair value gaps to continue lower. If both of those happen, I don't mind which one happens right there. Then we'll react and we'll follow through on whichever side is showing the respect right there. That's the exact same thing for silver right here. Now, silver also came into that fair value gap already. This is the fair value area right here on the weekly, right there, from that high towards this low. Then right here on the daily, this is the fair value area low, which we just previously marked out. Then on the daily, what we see right here is this daily fair value gap. Now, we also had a sting into this. Again, I'm not too sure why the chart is not showing it right now, but we had a sting into it. Then from that fair value gap, we got a 4-hour fair value gap right there to potentially continue lower from as well. But again, I need you to understand it right here. The higher time objective up until that moment has always been bullish. So right here, if we want to continue lower, I want to see a new daily fair value gap to continue lower from, to then potentially target this liquidity right here. In the meantime, I want to wait, be on the sidelines, see what we want to do right here. If we want to respect or disrespect this daily fair value gap. The exact same situation on gold. If we disrespect it, continue higher. If we respect it, right there, and continue lower from it. Now, on Bitcoin, what are we seeing? So it played out very nicely, like we mentioned as well, with the elections, news lining up perfectly, very coincidentally, who knew? Elections lining up right there with all-time highs on Bitcoin. Currently, no signs of slowing down or anything. So right here, this is just pushing higher. It's at an all-time high for me. Whether it's investments, whether it's trading opportunities, not financial advice, is never interesting to look to get involved. So, because there's guaranteed going to be a retracement sooner or later. And I would simply want to wait for that retracement sooner or later. Whether that takes a year, whether that takes 10 years, who knows? But I don't want to get involved at an all-time high right there. I would like to wait right here as well. All right, Bitcoin, crude oil. Let's see, this has been a consolidation for a very long time now, and this honestly is not interesting to trade. So I would save some time and just not look at it. All right, Bank Nifty. Let's see. So Bank Nifty right here, it's also not super interesting. We have been consolidating for quite a long time right there. You can see how unreliable those fair value gaps are right there in that consolidation as well. So here, I would still say potentially lower prices, but to me, it's really not that interesting right here at this moment in time. All right, that's the forecast done. If you have a few pairs that you want me to go over specifically, then feel free to let me know as well. GJ, let's see. GBP, JPY. So the first thing that I would mention on something like GJ is the following. I would want to, let's first determine something. So if we go to the crosses list right here, let me move my camera a little bit. Right there. Then in the right side, right here, this is the cross list that I also trade. Now, you'll see they are split up. You have JPY, you have CHF, you have Canadian dollar, you have New Zealand dollar, and you have euro right there. JPY, they are all pretty much correlated, very much correlated. So if JPY is bullish, then Australian dollar JPY, will go higher. I mean, if JPY itself is weaker, then Australian dollar JPY will higher. But I mean right here, the JPY group will move higher right there. So what I would like to do is I would first determine if we are going to be bullish on JPY right here, then which one of these pairs is the strongest, which one is the highest probability to trade. Up until this moment, that is arguably CHF JPY right there. Now on JPY pairs, we are currently creating quite a big rejection. So for something like GBP JPY, this is arguably one of the least interesting JPY pairs that there currently is, because it's not strong enough to be the leader if we want to look for buys, and it's not weak enough to look for shorts if we want to look for sells and if we want to be bearish. Where Euro JPY, for example, is a lot more bearish right there, arguably. Now Euro JPY comes into this weekly value as well, so it's a little bit tricky right there. But arguably, I would still like to see bullish price action right here on the JPY pairs, because they have been quite bullish. So for something like GBP JPY, I would like to see a new fair value gap until we start running those highs to then continue higher. But then we could argue it's more interesting to look at CHF JPY, struggling with my words, to continue higher right there as well. If that makes sense. If that makes sense. Let's see. I didn't take any trades. I didn't take any trades this week. I didn't take any trades. Let me see. 4-hour sharp turn in kill zone or not? No. That doesn't really matter. At least for me, it doesn't really matter. You could potentially gather data on it if you want to. But 4-hour sharp turn doesn't even fit in a kill zone. At least not in a singular one. That's a big question, but would you tell us which of your concepts you use the most? I'm looking to get into the MT in the near future. I'd love to see it. Fair value gaps. Well, let me state it like this. Everything I do is essentially based on fair value gaps. So, for example, something like this. Let me see if you can see it right there. Get it like that. So, a forecast or a bias right there, foundational levels, they're essentially all based on fair value gaps. You might still need market structure, even candle signs right there is also a different concept, most people think, than fair value gaps, but they're all based on fair value gaps. So it all comes back down to fair value gaps. Candle signs is fair value gaps. So if you're interested in that, let's dive into some candle signs right here. And let me explain it. Today, the candle signs module started in the MMT. And there's a first video that I made. And the first video in the candle signs module in the MMT today is what is candle signs? Number one, what is candle signs? And I used gold as an example right here. And what I did right here, so in candle signs, you generally speaking have two types of candles. There's two extremes. You either have trending conditions, you have or you have a reversal, essentially. In the market, you either always have trending conditions or you have a reversal, essentially. So right here, what we have is this candle right there. Now, this candle, and I'm talking about the most recent weekly candle. So this candle right there, this is a weekly candle right there. If you go into the 4 hour right here, then that weekly candle will be reflected. So let me show you. Let me mark it out. This right here is the weekly candle right there. This is what makes up the weekly candle. What you'll see is bullish fair value gaps being created right there. So we have bullish fair value gaps right there, and bullish fair value gaps, which we are respecting to continue higher. Now right here, if we take a look at this most recent candle and take a look at this disrespect candle right there, then what do we see? At this candle. If we go into the 15-minute time frame right there. On the 15-minute time frame, that 4 hour candle, which started, let's see, at right there, it's again bullish fair value gaps right there. Then if we take a look at this weekly candle right now on candle signs again, and now we take it back one candle and we focus on this candle, because what happens during this candle's duration? This is what is known as a respect candle. And a respect candle essentially is when we have a long wick at the top or a long wick at the bottom. That shows that it's respecting something. So right here, what are we doing inside this candle's duration right there? Well, if that candle opened, we first went lower and then we went higher right there. So if we go into the 4 hour, then what do we see? We see right here that we first have fair value gaps lower right there, and then we have fair value gaps higher. So why is this? Well, it's inevitable, and let me state this very clearly, it is inevitable for price to move higher, and when price moves higher, it is going to create bullish fair value gaps. When price is going to move lower, it is going to create bearish fair value gaps. That will always stay like that. Now, the reason why that is because that's simply the intention in price. So what I mean by that, if I move forward, I might be walking. You can say walking is the same thing as price action without fair value gaps. If I am running, you will see me running and now use my arms, etc., etc. Running is the equivalent in the market of creating fair value gaps towards one side. So when the market is going higher or lower, no matter what it does, it is going to create those fair value gaps. So that is very important to understand. So right here, those fair value gaps are the intention of price. Now these fair value gaps, if you zoom out right here, they turn into one candle. That is candle signs. So candle signs is not candle signs a magical new concept. No, it's simple fair value gaps from a different perspective. So in the candle signs module video today, we mentioned that, or I mentioned that candle signs and order flow or candle signs and fair value gaps is the exact same thing. It's just dependent on what time frame you are looking at. So if you remember, I talk about sometimes the relativity theory. Now, that might sound very fancy. It's not that fancy. There's a very logical, simple thought process behind it. And the relativity theory, the way I like to think of it to make it make sense for myself, is Albert Einstein had a relativity theory, and he stated, if you are looking at something from a different perspective or from a different standpoint at that moment in time, then to you it might seem different. So it's relatively based on how you are looking at something. So the relativity theory is as well and this might seem very advanced. Again, it's not. It's quite simple if you understand it. Once you understand it, then if I look at the weekly right here, I am looking, relatively speaking, at order flow, but also at the same time at candle signs. Because if I now zoom out at the 3 months time frame, all that price action that we just looked at, those value gaps, they turn into one singular candle. Might seem like we're trying to make things very complicated, but it's quite simple actually, because it's all based on fair value gaps. Just the same thing on different time frames, if that makes sense. That's candle signs. Well, that's the basics of candle signs, if that makes sense. It's very interesting. And once you understand candle signs, you understand essentially a lot, because if we move on, let's see. Bias and candle signs, they are correlated. Because if you, let me first state bias. Let me grab my pen right here. Let me remove everything right here and this one as well. So what is bias? This is, if you are trading, you need to be able to define every single concept that you use. If you can't define it, if you don't know what you're doing, well, if you can't define it, then you don't know what you're doing. So a trading plan, the first step in any given trading plan, all starts with a bias. So a bias right there, what is a bias? A bias is direction in price. Meaning, are we going higher or are we going lower at that moment in time? That's the question for bias. So then we need to understand, how can we determine if we are going higher or lower? Now that's arguably also where fair value gaps comes in. So if fair value gaps come into play, then also candle signs, because candle signs and fair value gaps are the same thing on different time frames. Now, not only that, because we need to see what are we moving towards in price action. So a bias, more defined, is the direction, yes, but it's also a target. Because a bias is direction, but you're going to be establishing a target. How can you establish a target? If we take a look at this price action, and the first thing, if you struggle with bias, if you struggle with the higher target, if you struggle with trading in general, all I want you to do is focus on the following. Mark out the PD rays. There's three PD rays I want you to focus on. You have fair value gaps, fair value area, you have liquidity. That's it. A fair value gap is sitting right there. Mark out the fair value gap. Mark out the liquidity, swing points, swing highs, swing lows. Then right here, we have this fair value gap, that swing high right there. Then you need to understand, price is always moving towards PD rays. That's why we focus on those PD rays, because price is always moving towards PD rays. It is just your job to find out what PD ray we are moving towards next. So that is where fair value gaps come in, because if we continue higher, then what will we create? We will create bullish fair value gaps, which are also seen through long wicks. So when we are respecting right there a fair value gap, a previous fair value gap, what can we argue? We could argue at that moment in time, well, this prime ray is the next target right there. That's a lot of that's essentially my whole trading concepts, etc., whatever you want to call it, summed up right there. And that's very important to understand. So here, once we start to create those fair value gaps to continue higher, those fair value gaps, they tell us the direction. But the biggest, because this is easy for everyone, I would argue, to a certain degree, this is understandable for every person. It becomes very difficult when you try to get to a bias in conditions where you shouldn't be able to get to a bias. Let me explain it as well. So here on GBP/JPY, if we just take a look at this price action right here, we are recently not coming from a fair value gap. We are recently not coming from any PD rays. So we're not respecting anything. We are not creating fair value gaps. This, at that moment in time on GBP/JPY, is just not a pair where you can easily understand, hey, we're going higher or lower. When there is a disturbance right there, so you can't clearly get to a bias, that means you shouldn't be trading it in the first place. Listen, every single person, me, you, on Twitter, on Instagram, on YouTube, whoever it may be, can get an idea of what price action wants to do. The difference between a good trader and a bad trader is the good trader can find good ideas. The bad trader always finds and forces bad ideas on bad price action. Everyone can do that. I can go into this price action and I can look at it for the next 15 minutes and say, well, I think we might want to do this. I'll think of a liquidity theory right here. I think we might want to sweep this to then continue higher, or you might want to do that. That's not what you want to do. Price action should talk to you. Price action is telling you a story, and the more difficult the story is to comprehend, to understand, the more it is telling you, don't trade me. Don't do anything right there. You don't want to trade this price action. If price action is telling you a story and it's a very easy story to understand, that's high probability. That's trading. So trading is oftentimes made very difficult because people using the concepts make it very difficult because you apply the concepts in a scenario where you shouldn't be applying it. I hope I'm making sense. But that is very important to understand. So right here, on all these pairs like a GU where it's difficult to get to a bias, is not something you want to trade. EU right here, where it's very easy to get to a bias, that's something you want to trade. That's what you want to focus on. If that makes sense. And that's how you then get to a bias right there. Now, a bias is the first step of a trading plan because a bias focuses in with the foundation levels. It's the first level of a foundation level. The foundational levels, they make up a trading plan. So what I mean by that is in a trading plan for me, and the reason why I always say I can only do so much. I can give you concepts, but I cannot make you profitable in that sense, what I'm trying to say. And what I mean by that is a trading plan is mainly 80% objective. That's how I want it to be. But it's 20% subjective. That 20% subjectiveness, that's where experience comes in, essentially. That's where you need to journal, and you need to journal your mistakes and see what you're doing wrong, do more of the winning stuff, if that makes sense. And that's where people come in. So a lot of times when people come to me, hey, Arjo, I'm funded because of you. You're not funded because of me. You're funded because of you. I may guide you in the right direction, but at the end of the day, when you are funded, when you're getting payouts, it's all you, my friends. So right here, those foundational levels, they are the 80% objectiveness in a trading plan. That means the first method is a bias right there. Then the second is a narrative. Bias is direction. How are we getting there? Narrative is, bias is direction. Where are we going? Narrative is how are we getting there? So if we are going higher, then how are we going higher? Through fair value gaps, through fair value areas, etc. Now, after a narrative, you have context. And context is the area where you're going to be looking for trades. Next, in that context area, you are going to have an entry. Entry is your entry confirmation inside that narrative, inside that context area. Then after entry, you have risk management. That's a trading plan. And then from there, you gain experience. If you stick to the same thing and you gain experience, you do things over and over and over. You journal, you journal, you journal. You repeat. You might be repeating mistakes, but you want to filter out those mistakes. That's very important. That's very important. We need more examples of how to read ugly bias. You don't need examples of how to read an ugly bias. And let me explain that as well. You don't need examples on how to read an ugly bias because if you need me to give you examples on ugly bias, then you already know what an ugly bias is. And let me make that more sense. If you open a chart and you can't get to a bias, then that's an ugly bias. That's it. When you open a chart and you can't get to a bias, then that means it's an ugly bias. If you open a chart and it's a clear bias, that means it's potentially time to trade. It's a clear bias to you. So that's very important, if that makes sense. Could be talking about this for hours and hours and hours. So, and I get your question, by the way. It's not to say, hey, don't ask me that question of an ugly bias, because it's a good question in my opinion. But I think you need a mindset shift in that, because I was also in a state where I needed to ask someone else, hey, can you let me know what an ugly bias is? Whereas it's very simple. And everything that we do in the MMT as well is, I think a lot of in the trading industry is people try to get you hooked to a certain degree. I'm trying to create self-sufficient traders. So to get for you to an ugly bias, it's simply if you open a chart, it doesn't make sense to you. That means it's an ugly bias to you. That's all that matters. That's all that matters. That's very important. So even for a forecast, it's very important to understand when we create a forecast, it's ideal to still do your own forecast either before or afterwards as well. And after, you can compare it with me and say, okay, well, Arjo mentioned this, did I miss that, etc. Otherwise, you're just going to be reliant, and we don't want you to be reliant. That's very important. Because I'm not going to be there when you take losses or when you take winners. So again, going back to the point of once you are funded and once you are making money from trading, once you are profiting, it's all up to you. Because I'm not there when you are clicking buttons. It's all credits to you, my friend. All credits to you. I will, Rakesh. There's a video coming on candle signs as well. Explain context. Context is the following. Let me draw it. Yeah. I don't like that you can still see what I previously did right there. I want it clean. So context is the following. We start off with buys. Buys right there. Buys is again, hit myself with the microphone. Buys is, are we going higher or are we going lower right there? So using the arrows, very simply said, higher or lower. Then that, once we are going higher or lower, you have determined a PD rate that we are going to target. Now towards that PD rate, you are going to do a narrative right there. And narrative, excuse me for my horrible handwriting, but narrative right there is how are we going to get there? So if we establish in bias that we are going higher right there, we are aiming for the next premium array. That means right here, there's a method of getting there. There is going to be a retracement in the market. So if we are going higher right there, and we establish, well, we still want to reach for this level right there. So we still want to continue higher. Then once we create a retracement, how far can this retracement be before we continue higher again? That's essentially what you want to determine in narrative. Why do you want to determine that? Because trading is all about understanding how far price can retrace before it continues higher. And what I mean by that, trading is all about placing an entry, understanding that it shouldn't trade back below a level before it reaches a certain next level. If that makes sense. So if you understand, this is how far it can retrace right there, based on the higher time frame, even the 1 hour, whatever it may be, then right there, that might be a fair value gap or a fair value area or a swing low in this case. So here, this is where you want to look for an entry to then continue higher, target the target you had established earlier on right there in bias. Then once you have narrative, you move on to context. Now, oh, that's not a C. Context is where market maker models come in. Context right here is the same area as the narrative area you had established right there. But context consists of two things. You have, first of all, this narrative area is what's known as a boundary. Right there. Why is it a boundary? Because this boundary, once we trade back into it, it's a boundary. So you step on the boundary to go into the entry pattern, to go into the lower time frame, essentially. Now, right here, once we have established a boundary, okay, we also, and context, the other side of context is a target right there. Now, you have already established, all this is already established in narrative. Narrative, you already understand context. Because this right here, and let me draw that again, right there. When you think we want to continue higher from this fair value gap right there, this is your boundary to go into the lower time frame, or whatever time frame it might be, to find your entry pattern, entry confirmation to potentially continue higher. This is a discount array in this case, because we are going higher. Then this first premium array that we encounter is your context area. So your context area is from the discount array, your narrative area, the boundary, to then, right there, the first premium array that we encounter, which in this case is a swing high. That's oftentimes what you'll see. Then right here, this context area is the market maker model area. So this on the lower time frame might look something like this. Let me see if I can draw it still. Original consolidation, might see some weird price action. Retracements, you don't want to trade them, they're odd. Then once we reach those discount rates, can you see that? Yes. Here we get a sharp turn right there, and we start to have fast price action to move higher towards the swing high, which is that original consolidation right there on the left. That is a context area. That is very important to understand. And that is essentially where you want to get involved. And that's what trading is about. That's trading. And that's a certain pattern that can be repeated oftentimes. And once you find a certain pattern like that, that's trading. And the reason why this context area is so important right here, this one, is because institutions, if they offload or unload new orders at that discount rate right there, they will offload. The first opportunity is that first premium rate, that opposing premium rate right there, which is a swing high. That's very important. And that's why it works. Whew. Let me know if that makes sense. Thank you for that. No worries, no worries. My pleasure, my friend. See, I saw a question I wanted to answer. Thank you, Mind of Mitch. Thank you. All we need to repeat. I do what you teach and only I'm okay. Simple. Perfect. Love that. I think that's very true. I saw a quote, and the quote was, we need to be... no, that was not the quote. It said something along the lines of, we need to be... or things need to be repeated to us rather than we need to hear new things, if that makes sense. So what the quote meant was, people oftentimes need to hear the same thing over and over and over to really understand it, instead of constantly teaching them new things. And that's why in the MMT, that's a huge philosophy. Our concepts have been the same for an extremely long period of time. All we do is create modules around those same concepts and shine a different light on it. So, for example, I now might explain the foundation levels like this, but next time I might start from risk management, then work to entry, then work our way up. So I explain it from a different perspective. And some perspective might make more sense to you, another perspective might make more sense to another person. Yes, you can use candle signs to confirm a fair value gap, 100%, for sure. 100%, my friends. I don't really use fundamentals. So the way I like to think about fundamentals, I think fundamentals are important in the long term. If you're, for example, position trader, very useful. If you're a day trader or a scalper, you can't predict what price action will do in the next few candles just purely based on fundamentals. So in the short term, the market runs mainly on liquidity. In the long term, it's liquidity, but fundamentals takes a bigger role in it as well. If that makes sense. The candle signs module is starting right now. I think it ends. We will have approximately, I believe, around 9 to 10 videos on it, if not more. Still depends a little bit. And it ends in November. So beginning of December is when we'll start. I had a deja vu. It's quite odd, you know? Not gonna lie, I've watched your MMC series for countless times, more than 10 times, I believe. And every time I find new knowledge from it, love that, love that. I think that's very important. Someone in the mentorship in the MMT also said, if you truly start to sort of work your way back to where the knowledge is coming from, then whole new doors will open for you. That's also what I used to do with anyone who I am learning from, is I try to sort of take steps back on where they are coming from, but I also try to, for example, if I already know what they're going to say next, that's when I know I'm on the right path. I can sort of creep into their mind. You make it easy. I hope I do. I hope I do. If I don't, I'm doing something wrong. But thank you, JT. Thank you. I appreciate that. I appreciate that a lot. Narrative. Narrative is we can go over narrative. Let me see. I need some spray for this. Let me make this a little bit wet. I need a better spray. This is not great. This is not great. But narrative is essentially the following. So bias is, again, we have established bias. Bias is direction. Are we going higher? Are we going lower? And narrative is how are we going to get there? Narrative consists of 3 things. Number 1. And number 1 is important because number 1 is superior. If you don't have this, you don't have the other things. Is FPG. Fair value gaps. Those are the number 1 PD raise. Number 2, fair value areas right there. That is number 2. So fair value areas don't exist if you don't have fair value gaps in the first place. That's important to understand. Number 3, you have liquidity right there. Now fair value areas are essentially the same thing as order blocks, breaker blocks, and mitigation blocks. Those are the same thing. Liquidity is swing points and previous candle highs, previous candle lows. Now your first focus is, it's a hierarchy. So the first focus is going to be on fair value gaps, then fair value areas, and then liquidity. But you always want fair value gaps in the lags right there. That's very important. Now, let me draw them out for you. This is better. A little bit better. Okay, let me see. Let's see. Oh, thank you, Don. Thank you. I appreciate that. There's no need for it, but thank you, Don. Thank you. Let me see what you said. Let me see. With ST, with sharp term, is the order flow lag into the high time PD rate that takes liquidity, a higher time order block that changes the state of delivery, and its overlap with the fair value gap out of the PD rate is fair value area. Yes. Yes. It's essentially a filled order block. Yeah, you are correct, my friend. Yeah, it's really good. I like that logic a lot, Don. It shows me that you're thinking about it a lot. Really good, Don. I like it. Great stuff. Great stuff. So a fair value area and fair value area and Don, on the lower time frame, you will find fair value areas are from intermediate highs to intermediate lows, or from intermediate lows towards intermediate highs. Now, in a lag high, we move higher right there. Once we create a retracement right there, we might want to continue higher right there again. Now, in a situation like this, what happens is we might come back into a fair value area, whatever that may be previously. Now, right here, this is going to be an intermediate high. This is going to be an intermediate low. On any given time frame, on the lower time frame, usually, once you zoom in enough, it will become an intermediate low, intermediate high. This right here, this area, how do I draw this correctly? This retracement that we previously got, that's the fair value area. So this right here is now the fair value area. This is only a fair value area if in this lag right here, we got a fair value gap somewhere in the creation of that lag right there. So when that is the case, this turns into a fair value area. The first we can retrace is back into the fair value area to then continue higher from it right there. That's a fair value area. Now, a fair value area, this you might see, that could be an order block, that could also be a mitigation block. Now, the same thing like Don just mentioned as well, when we have a situation like this, for example, continue higher, let's say this is a high time PD rate, we sting into it, we create this sharp turn right there, we continue lower right here, then what do we have? This is a filled order block or mitigation block, whatever it may be. That right there is a breaker block. That right there is also a fair value area. So and the reason why I call the fair value area, because it all comes down to the same thing. And the reason why I want to call it that way is because it's a simplified version and you essentially talk about 3 things into one. So 3 rules turn into 1 rule. When you start full-time trading, it's very important to understand time management, your focus, your energy, your brain points. So what I mean by that is you can't allow yourself to focus on 1,000 things at the same time. You're going to be distracted. So it's easier to, from 3 things, turn it into 1 singular thing. So this right there, that fair value area, is what we can continue lower from, which is also the breaker. And that's a narrative. That's narrative. And of course, there's nuances to it. Of course, this is quite a ground level view on it. But that's narrative, essentially. The MMT and the mentorship are the same thing. No. It's not the same thing as a balanced price range. I believe so. I don't think so. I believe. Correct, Luis. Luis Humberto Vasquez Ruiz. Correct. Like, I don't want to take I don't want to sound like I don't want to stroke my ego, but there's a lot of people, for everything that we go over, there's a lot of people exactly copying this to the exact T in videos. Even people where you might not even notice it. But enough on that, let's focus on ourselves. Sometimes I worry too much about that. Well, I don't worry about it. I like it when people do it, but if you say like it is your own, that annoys me a little bit. I think people can understand that. But it's okay, it's okay. I'll try not to focus on it. Can we join MMT as beginner? I would advise first, if you understand the A to Z guide to a certain degree, I would advise go over that first. If you're a complete beginner, I wouldn't advise joining the MMT. No. Thank you, Free Spirit. Thank you. I wouldn't say it like that. FEG alignment. I think I know what you mean. I'll go over the MMT indicator afterwards as well and what it's based on. I think that's more important to understand the indicator itself. But right here, FEG alignment is the following. You'll see this as well everywhere, and this is something we have been teaching in the MMT for what is it, almost 2 years now. And a lot of people mention it nowadays when it comes to FEGs as well. And it's essentially the following. So it's quite logical and quite simple, to be honest. When we continue higher, right here, let's say this is the daily time frame. Then the daily time frame might have a fair value gap sitting right there. Now, you also need to take into account the other time frames. So the FEGs all need to align with each other. Now, you need to understand the higher the time frame, the stronger the time frame. So the monthly is stronger than the weekly is stronger than the daily, for example. So if this is a daily, right there, a daily fair value gap, if below, or right below it, you have a weekly fair value gap right there, we are more likely to disrespect the daily fair value gap, come back into the weekly, to then continue higher right there. That's FEG alignment. So understanding which fair value gaps need to be in alignment with each other. If that makes sense. Let me show you. This right here is the MMT indicator right there, the probabilities indicator. It's very interesting, actually. I like it a lot. So I'll tell you what it's based on. I think that's more beneficial than just me going over, oh, this is the indicator. So the indicator right here takes into account objective measurements of price, and it tells you how high probability something is to continue higher or continue lower. Based on that percentage, the outcome, so it gives all the signs right there, the objective signs, it adds them onto each other. Based on the time frame it is on, it then calculates the points, and based on the points that it calculated, it gets to a percentage. The arguments and signs are all by me. I like to call it sign language. It's just a simple way of saying it right there. And what this does is if you go into a chart, let's say EU right here on the 4 hour, then we had established previously that EU is okay probability. So here we see 68.4% bearish, that it's more likely to continue lower at that moment in time. If we go into something like, let's say GJ, let's pick that example again, GBPJPY. And here on the 4 hour, let's see. It might say, at this moment in time, 100% bearish right there. Now, I do have to mention that 100% bearish is definitely not 100% bearish right there. And this is just for people that are learning about sign language, that are learning about arguments, to see, hey, what are the arguments that we are talking about right there? It's not a replacement, and I will never use indicators to replace manual analysis. That's very important to understand as well. This is just a tool to help you shorten the learning curve on becoming a self-sufficient trader. That's important. So that's why we have this, and it's quite interesting. It's quite a funny tool right there. So on the dollar, it shows what it's currently showing right there. Quite interesting. Quite interesting. And then next to it, we also have, I believe the developer of this has a website on it. It talks about the how much arguments and signs it has, and then based on that, it sees what the price is doing, and it's quite accurate. It's quite nice. Quite nice. Quite funny. Let's see what we have. If you have a weekly, oh, that's okay, VR. So if this right here is a weekly fair value gap, and this is a daily fair value gap, then the weekly right there to be respected to continue higher, if that makes sense. No worries, Stevie, no worries. No worries, my pleasure. Journaling my trades is very simple, to be honest. Very simple. It's very straightforward. Essentially, the first thing you want to journal is when did I take a trade? Why did I take the trade? Where did I take the trade? That's about it. It's very straightforward. As long as you write something down, there's no perfect way to journal. As long as you write something down, and you're already doing very good. Love to see it, Jacob. I'll see you soon. I don't use SMT. I don't use SMT. Is it good to use indicator if you use advanced trading? Well, the thing is, for example, if I were to use this indicator, I would say I use it as a time management tool. So what I mean by that is, if this indicator already tells me that something is low probability, I can just move on quite fast. Next to that, it's to shorten the learning curve. So to learn what are the signs, how can we recognize high probability price action, for example. But to also sum it up, you don't need indicators. You don't need indicators in advanced trading. And is it good? Well, you can fill that in yourself. But for me, I would say you're very well off without indicators. According to your experience as a filtering process trader, looking at 10 plus pairs, what is the reasonable of expected trades a month in your experience? Usually 4 or 5 on average. Well, it depends. Currently, my stick trading plan is around 4 or 5 a month. If delirium, it could be a little bit higher. So let's say 6 on average a month, something like that. Some months you will have nothing, but some months it will also be very good. And to also add on to that, so if we take a look at this right here, so if we look at the pairs, then I need you to understand, when you look at the forecast list, you're essentially only look at the majors. This is essentially one pair that could be high probability. Because if the dollar is high probability, the majors are high probability. The same for the crosses. You have JPY that could be high probability, JPY. CHF could be high probability, Canadian dollar, New Zealand dollar, and euro. So it's essentially 1, 2, 3, 4, 5, 6 pairs that you are looking at. It's a little bit of a perspective mindset shift as well, because you're not looking at 30 individual pairs. You're looking at 30 or you're looking at 6 groups, if that makes sense. Every time I enter the market, liquidate me. I'm sorry about that. No, it's a difficult question to answer right there without having any context on what your trades are, where your trades are. So I would first see where are your entries? As in, is it on the higher time frame? Why is it continuing lower first before it continues higher? Is your overall direction still correct? Those are a lot of questions, if that makes sense. But the answers are in your journal. I can guarantee you that. I hope, RK, I hope next week. I've said it multiple times right now. Take it with a bit of grain of salt, but I hope next week. It's almost ready. We're in the final stages. Final stages. All right. All right. I'm going to end it here, team. It was a very, in my opinion, informative live session. Thank you everyone for being here. Thank you for taking the time on your Sunday or even your evening. For a lot of people, that's really real dedication in my opinion. And only time is holding you back from making it, in my opinion. Just thank you everyone for being here. I really appreciate it. Thank you for the great questions. Without great questions, you won't have great answers. Thank you everyone. Really grateful for every single one of you. And next week, again, I hope I hope we get the video as well and we get that going again. But of course, at 1 p.m. New York local time on a Sunday, we are back with the live session as well. Every single Sunday. And then the video, I'll keep everyone updated in the Telegram, Instagram, whatever it may be, Twitter. I'll keep everyone updated on the video as well. Thank you, everyone. Thank you. See you at the next one. Thank you.